So a lot of you have been asking about NIO, the Chinese automaker. The stock is down well off its highs and is traded down to some pretty interesting levels. But should you buy the stock? Let's talk about the technicals and fundamentals. NIO IPO'd at $6 in September of 2018 and after a small pullback hit a high of $67 in January of 2021. Since then, the stock has traded lower, currently at a price of $7.38. Technically speaking, we broke the downtrend that has been in place since January of 2021 and have now been consolidating around the $7 level for the last year or so. We are still trading above the IPO price, which is a good sign, though not by much. Now, whenever a stock is doing a retest of a level or attempting to put in a double bottom, I'm always looking for an RSI divergence, where in this case, when price came down to the same level, I would have liked to have seen the RSI make a higher low, but instead it just stayed at the same level. With the exception of this spike over the summer, NIO hasn't been able to consistently trade above the 200-day moving average, which to me indicates that we are in a bear market. Now, while this $7 level looks enticing, down close to 90% from the all-time high, the all-time low around $1 is still another 80% lower. Now, if we look at the last few months of price action, we are steadily making new lows. We did trade above the recent swing high of 820, which is a good sign, but the sellers quickly stepped in and took the stock lower. Now, until we can get a few closes above the 820 and ideally 850 swing highs, it's tough to make a case for a trend reversal or a new bull trend, as the bulls are clearly not in charge. The major issue plaguing the stock is the lack of profitability. Now, despite revenues showing a modest increase, NIO has yet to report a profitable quarter. With central banks around the world keeping rates elevated, the market has no patience for companies that at the very least can't show a path to profitability. Competition is very high among Chinese autos. BYD, XPeng, and Li immediately come to mind. If we contrast NIO with BYD and Li Auto, two other Chinese automakers, their charts are looking far more constructive and they are profitable. If you want to invest in this sector, Chinese autos aside, we have American automakers like General Motors who just reaffirmed guidance and announced a $10 billion stock buyback, and of course Tesla, who just announced the Cybertruck, and both are profitable while having much better technicals. The MCHI, an ETF that tracks the Chinese stock market, is down about 17% year to date, while the SPY is up 20%. Now, investing in China is challenged because there's always the threat of government regulation, low economic growth, and confrontations with the US, most notably over the chip ban, which just hurts sentiment. So I totally get the appeal of wanting to buy NIO at $7 when it was trading at $67 a few years ago. But given the lack of profitability, the high level of competition among Chinese automakers, a challenged Chinese investing landscape, and just the fact that many domestic autos like Rivian, GM, and Tesla are doing much better fundamentally and technically, I can't get excited about NIO. Yes, Chinese stocks can get an oversold bounce, but I don't feel the need to invest in China until we see a turn in price and sentiment. Here's what I need to see to become interested in NIO. Now, if you feel the need to invest in autos, take a look at GM, Tesla, or Rivian. China is too hard right now, and there's no need to invest there until we see a more favorable economic landscape.